not often that a 58% revenue growth and a 100% PAT growth is considered below expectations, but that's what Kaynes has had to do because of the standards that they've set. Jairam Sampath Johnson to talk about the numbers and the outlook ahead. Mr. Sampath, good having you. Thanks so much for joining in. To your mind as well, was Q2 slightly below what you had penciled in, even as you've guided to a very strong H2?
Yeah, hey, good morning, and thanks for having me here.
Pleasure is ours, yeah.
Yeah, so I think it is what we expected it to be. See, the revenue numbers go up and down during the quarter, but I think for the year we hold our guidance and we focus on the profitability. And the good news is that profitability is beyond what we had talked about and anticipated. And so from that perspective, I think also look at the order book growth. That also is in line with what we think company should be doing over the short term, like 3 years time frame. So I guess it is what we expected. Yeah, obviously there are a lot of factors in the market which certain sectors will slow down and certain sectors will kind of get some acceleration. So, but that's part and parcel of a quarterly, let's say, business rhythm.
Sampath,
yeah.
Sorry, Mr. Sampath. So just trying to clarify this, most notes that we have like talk about how they are doing a small profit after tax outlook cut because of lower revenue assumptions and maybe higher interest costs. So on that lower revenue assumptions leading to a PAT cut or a profit after tax assumption cut, you kind of deny that that is a possibility. You think it'll all stay up fine.
Yeah, obviously the facts speak for themselves. First quarter to second quarter, there's an improvement too. And for the half year, there has been a significant growth in the profitability and actually the quantum of profits too. Yeah, we always the street expects every parameter to improve. We'll work on that. But I think I don't see any major issue. It's just that the portfolio changes a little bit in terms of its composition. You know, sometimes you do get high revenue items first, and then sometimes you get high profit items first. But if you look at the order book expansion, that has been pretty much in line with what we had expected. We are sitting on an order book of about 8,000 odd crores. So that's a pretty strong. Yeah, there have been environmental, let's say, elements which have been causing some volatility in the minds of people. But on-ground businesses, we are only seeing more footfalls and more requests for quotations and so on.
Which is heartening to know. Mr. Sampath, just one final question. You're getting into some critical areas as well, right? Semicon being one of them. In a minute and a half, if you can tell us, when does the high growth vector areas of some newer elements start coming in for you? Is it FY27? Is it beyond FY27? Semiconductors, for example.
Semiconductors, for example, FY27, you see some significant growth because by then the capacities will be built up. As you know, we probably were the last ones to get the approval, but we quickly ramped up and we are the first to ship out 900 sets of multi-chip modules. And we do have traction from many customers, not just in the legacy, quote unquote, the older generation area, but new generation area. And the PC board also is going to quickly ramp up, which is the bare PCB. We will probably start shipping commercially in FY27. So FY27, you can see these two new businesses coming of age and with significant capacities installed and also utilized. And the business in the EMS sector also is likely to grow because some of those sectors which were dormant for last, let's say, 1 year or so, like the railways and aerospace, etc., that's also going to already, we can see the signs of picking up. So all in all the three will fire up and the newer sectors will fire up a little faster.
Got it. Mr. Sampath, we'll have to leave it for that today, but we hope to do a mid-quarter conversation with you before your next quarter results come out, just to have a conversation in detail. But thank you so much for joining in today and clarifying those key points. All right, that's Kaynes Tech. Expensive stock, but they're saying that things are looking okay, ordering activities okay, critical areas start growth soon.
If you want the semiconductor play, how many options do you have? Yeah. So that scarcity premium is there.